Hello friends, welcome to new session. In this session, we are going to discuss 12th Commerce Chapter 6 Money Market. Let's start from the choose the correct answers. The money invested in the call money market provides high liquidity with low profitability. So you invested the money into the money market, you will get definitely profit if you keep the shares for a long time. A major player in the money market is the commercial bank. So with the help of bank, we can sell the company's shares. If you are the owner of a company, you can sell your shares with the help of commercial bank. Money market provides short-term funds. With the help of market, short-term funds will be provided. Next, money market institutions are commercial banks and discount houses. This is the two institutions in money market, commercial bank and discount houses. Risk in the money market is low credit and market risk. There is a market risk, is always there in the money market. Money market means what? Share market. If price goes up, you will be profit. Whatever company shares you purchased, for example, you purchase the shares of Reliance company, or you purchase the shares of Tata, TCS company, then if they are doing a good business, definitely will get the profit. If the company goes on loss, you will also get a loss. So it is totally dependent upon market risk. Next, debt instruments are issued by corporate houses are raising short-term financial resources from the money market are called commercial paper. Okay. This we already studied in short answers in the previous lessons. The market for buying and selling of commercial bill of exchange is known as dash. Commercial bill market. Simple. The market for buying and selling of commercial bill of exchange. Whenever it is given question commercial bill of exchange, you write commercial bill market, because commercial bill of exchange will come under commercial bill market. Next, a marketable document of title to a time deposit for a specified period may be referred to as a certificate of deposit. Next question. Treasury bill commands dash high liquidity. There are types of bills. The treasury bills commands high liquidity. Government securities are issued by agencies such as all the above. So central government, state government and semi-government authorities also issuing the government securities. So that's why we have to write the answers all the above. Now we move on to very short answers. First question. Define the term money market. Money market means what? Already I said share market. According to Crowther, there are so many definitions, but this definition is easy definition. According to Crowther, the money market is the collective name given to the various firms and institutions that deal in the various grades of near money. Okay. Next one, what is a CD market? This is not compact disc, not CD. Here CD means certificate of deposits. Certificate of deposits. Certificate of deposits are short-term deposit instruments issued by banks and financial institutions to raise large sum of money. Certificate of deposits are issued in the form of usance promissory notes. The certificate of deposit is transferable from one party to another. So you can transfer certificate of deposit from one person to another person. Next question. What is government security market? This question has been asked in the half-yearly paper as well as March 20 paper, board exam paper. A market whereby the government or gilt-edged securities can be bought and sold. Bought means purchased and sold is called government security market. So wherever we can purchase and sold the shares, that will come under government security market. So what is government security market? A market whereby the government or gilt-edged securities can be bought and sold is called government security market. What do you mean by auctioning? Auction. A method of trading whereby merchants bid against one another and where the securities are sold to the highest bidder is known as auctioning. So auction everybody knows. Already you studied in the 11th standard also. Auction. The person who is doing highest bid will get that product. Same way here, if you say highest share amount, you will get the share. What do you mean by or meant by switching? The purchase of one security against the sale of another security. Purchase of one security against the sale of another security carried out by the RBI in the secondary market as part of its open market operation is described as switching. So you understand? For example, you have Reliance shares and now you want TCS shares. Now you are exchanging the shares, or for example, you are giving your Reliance shares to someone else and getting the another company shares in the secondary market. That is known as switching. Understand? For example, Mr. A have Reliance share and Mr. B have TCS company shares. So both are exchanging. One person is purchasing and one person is selling. So that is known as switching, exchanging. Next, what are the features of treasury bills? What are the features of treasury bills? Issuer, finance bills, liquidity, vital source, monetary management. Because they ask only what are the, they didn't ask you to explain. So no need to explain. So write the heading, that is enough. Next, who are the participants of money market? Participant means who are there in the money market. There are many participants operating in the money market. First, government of different countries, means different countries governments are keeping the shares of their companies. Central bank of different countries, private and public banks, mutual fund institutions, insurance companies, non-banking financial institution, RBI and SBI. SBI means State Bank of India, RBI means Reserve Bank of India. So this all the persons who are participating, means without this you can't run the money market. With the help of all these persons we are doing, or the money market has been worked. Understand? Now explain the types of treasury bills. Explain the types of treasury bills. Treasury bills may be classified into three. They are 91 days treasury bills. It's issued at a fixed discount rate of 4% as well as through auctions. 182 days treasury bills. The RBI holds 91 days and 182 days treasury bills and they are issued on tap basis throughout the week. So this will be done auction treasury bills. So 91 days and 182 days treasury bills are held by RBI. Okay, and you will get the 4% discount on that. 364 days treasury bills. 364 days treasury bills do not carry any fixed rate. The discount rate on these bills are quoted in auction by the participants and accepted by the authorities. Such a rate is called cutoff rate. So 91 days and 182 days, 4% discount is fixed in the auctions. But in 364 days treasury bills, the rate has been not fixed. The cutoff rate will be decided by the participants. Next, fourth question. What are the features of certificate of deposit? Document of title to time deposit. It is unsecured negotiable instruments. It is freely transferable by endorsement and delivery. It is issued at the discount to face value. It is repayable on fixed date without grace days. So these are all the features of certificate of deposit. What are the types of commercial bill? Demand and nuisance bill, clean bills and documentary bills, inland bills and foreign bills, indigenous bills, accommodation and supply bills. All this we are going to discuss in the essays. Here they ask only to write the headings. What are the types? Now we will move on to the essay. Now see the essay. Difference between the money market and capital market. First, what is the meaning of money market? Already we studied in the first very short answer. According to Crowther, the money market is the collective name given to the various firms and institutions that deal in the various grades of near money. Capital market means, according to Arun K. Datta, capital market may be defined as a complex of institutions, investments, and practices with established links between the demand for and supply of different types of capital gains. That is known as capital market. Now, easy explanation which is given in the difference. Now see here. First point, subdivision. In money market, there is no such subdivision. In capital market, there is a division of primary market and secondary market. Place of transaction. Transactions mostly take place over the phone and there is no formal place. But for capital market, transaction take place at a formal place. Example, stock exchange. In the stock exchange only, with the help of stock exchange only, you can purchase and sell the shares. Risk. Low credit and market risk. High credit and market risk. Liquidity. High liquidity in money market. Low liquidity in capital market. Next point. Underwriting. Underwriting is not a primary function. It is a primary function. Duration of funds. It is market for short-term loanable funds for a period of not exceeding 1 year. It is a market for long-term funds exceeding period of 1 year. Understand? So this is the difference between the money market and capital market. Now we will move on to the characteristics of money market. They can ask in the board examination either as a characteristics or features. Both are same. Short-term funds. What is the meaning of short-term funds? It is a market purely for short-term funds or financial assets called near money. Maturity period. What is the meaning of maturity period? It deals with financial assets having a maturity period up to 1 year only. Conversion of cash. It deals with only those assets which can be converted into cash readily without loss and with minimum transaction cost. So in the money market, all these things will be happen. Existing of secondary market. There should be an active secondary market for these institutions. Next point, demand and supply of funds. There should be a large demand and supply of short-term funds. It presupposes the existence of a large domestic and foreign trade. Wholesale market. It is a wholesale market and the volume of funds or financial assets traded in the market is very large. So in the high value, you can do the market. Flexibility. Due to greater flexibility in the regulatory framework, there are constant endeavors for introducing new instruments. Move on to next question. Next essay. Explain the instruments of money market. Now we'll explain one by one instrument. Treasury bill or treasury bill. A treasury bill is nothing but a promissory note issued for a specified period stated therein. The government promises to pay the specified amount mentioned therein to the bearer of the instrument on the due date. The period does not exceed period of 1 year. There are types of treasury bills. Already we discussed 91 days, 182 days and 364 days treasury bills are there. Next, heading certificate of deposits. Certificate of deposits are short-term deposit instruments issued by banks and financial institutions to raise large sum of money. Certificate of deposit are issued in the form of usance promissory notes. The certificate of deposit is transferable from one party to another. Commercial bill. A bill of exchange issued by a commercial organization to raise money for short-term needs. These bills are 30 days, 60 days and 90 days. So commercial bills are of three types: 30 days, 60 days and 90 days. They can ask in the examination, what is commercial bill? So you can write very easily. These bills are of 30 days, 60 days and 90 days of maturity. The commercial bill is an instrument drawn by a seller of goods on a buyer of goods. Explain the features and types of commercial bills. Drawer, acceptor, payee, discounter, endorser, assessment, maturity, credit rating. These are all the features. Now, see the types. Demand and usance bill. A demand bill is one wherein no specific time of payment is mentioned. So demand bill are payable immediately when they are presented to the drawing. Clean bill and documentary bill. Bills that are accompanied by documents of title of goods are called documentary bill. Clean bills are drawn without accompanying any document. Example, railway receipt and lorry receipt. Next, inland bills and foreign bills. Bills that are drawn and payable in India on a person who is resident in India are called inland bills. Bills that are drawn outside the India and are payable either in India or outside India are called foreign bills. Next, indigenous bills. The drawing and acceptance of indigenous bills are governed by native custom or usage of trade. Accommodation and supply bills. Accommodation bills are those which do not arise out of genuine trade of transaction. So these are the types of bills. Next we will move on to fifth essay. What are the characteristics of government securities? Agencies, government securities are issued by agencies such as central government, state government, semi-government authorities like local government authorities, municipalities, autonomous institutions such as metropolitan authority, port trust, etc. RBI special role. RBI takes a special and an active role in the purchase and sale of these securities as part of its monetary management exercise. Nature of securities. Securities offer a safe avenue of investment through guaranteed payment of interest and repayment of principal by the government. Liquidity profile. The liquidity profile of gilt-edged security varies. Accordingly, liquidity profile of securities issued by the central government is high. Issue mechanism. The Public Debt Office of the RBI undertake to issue government securities. Issue opening. A notification for the issue of the securities is made a few days before the public subscription is open. Switching. The purchase of one security against the sale of another security carried out by the RBI in the secondary market as a part of its open market operation is described as switching. Already all these points we discussed in the very short answers and short answers. Next one, auctioning. A method of trading whereby merchants bid against one another and where the securities are sold to the highest bidder is known as auctioning. So with this, our sixth lesson is completed.